What is going on, everybody? It is Masterclass time, best time of the week. I've been going over swing trading today. Swing trade today. Getting a lot of questions about swing trading lately. As always, guys, these are recorded and posted in the Masterclass section underneath Wolves University. Have been labeling them all, so you guys can go back beyond all of the channels that are organized in there. If you go through Masterclass, we also have what that class was, previous classes as well. So definitely go and check them out whenever you have time. Hopefully they're helping you guys. But today will be about swing trading since we had a lot of questions about swing trading. And I think a couple of these things that we'll talk about will maybe open your eyes a little bit, or it might be that aha moment, like, okay, that makes sense, and break it down a little bit more simple for you so you're not too overwhelmed. I'm your host, Ms. Banks, along with No Risk, No Premium.
What is up, y'all? Welcome to Masterclass. Excited for this one this week. Been very much asked about, um, the swing trading side of things, and I think this is a great tool that everybody should be utilizing, because some of the best mornings are very stress-free when you wake up, like on something like today, when every swing, everything that you've gotten into is up and green. It takes a lot of pressure off of you to have to, quote unquote, perform for the day, right? A lot of you guys are just trying to make money, if you will. But I think swing trading needs to be utilized, especially because majority of people in our community and majority of traders that try to put their hat in the market, they probably have a full-time job, right? So if you have a full-time job and you can't watch chats all day, you can't watch stocks all day, and you can't day trade, you can't do all, then swing trading is absolutely good for you. You can have any account size to do it. So without further ado, I'm going to get right into it. If you guys have any notes or paper, I'm going to say some things. I will tell you specifically to write these things down.
I
Okay.
do want to,
Majority. Oh, go ahead.
I'm just going to
Yep.
jump in real quick. I do want to start off, swing trading's great, but just know that trading itself has inherent risk to it. So whether it's day
Mm-hmm.
trading or swing trading, it's not that one is more safer than the other.
Well said.
I will
Yep.
say swing trading, it can, not to say is less risk, but you have more time for these trades to play out. So
Mm-hmm.
your entry doesn't have to be so exact. Whereas, day trades, especially zero dates or getting closer to Friday, one date, two dates, or even a weekly, your entries have to be pretty good, right? Your entries have to
Yeah.
be pretty good. We're
Precise.
swing trading. Um, the entries don't have to be absolutely precise. Obviously, still need to have good entries, but we'll go into that. But just wanted to side note because I know a lot of people are like, "Well, we got a question today. Which one is safer?" They're both going to have inherent risk, uh, but with swing trading, you don't have to have a exact, more precise entry. You can be a little bit off and still have it pay off, and we'll go over that for you guys. Sorry, take it away.
Yeah, no, I think that's a good way to start, Justin. Really good there. What we're looking for in swing trading, and especially swing trading we've been doing here in our community is the upside swing trade. So anything I say today, reverse it for the downside. If you're looking and somebody likes to be a little bit more bear in the market or play the downside, you can absolutely use all the principles that we're going to say today to the downside trade. But for this sake and what we've been doing really well as of recent is looking more so towards the upside trade, which in my opinion, I believe is a little bit easier, right? Just to look to buy the dip on strong names where buyers are. Just me personally. Like I said, flip everything for the upside trade. But without further ado, I'm going to get started. What are we looking for? Right? What are we looking for? Justin just kind of touched in on, your entries, your entries, your entries. What makes a swing trade good? Well, you guys all know this. We're market participants in the market. We participate. We do not move the market. We participate. So, with that being said, what you need to identify is where are the buyers? Where are the sellers? Write that down. Identify where the buyers are and identify where the sellers are. Okay. Identify where the buyers are, identify where the sellers are. And there's a couple of ways that you can play how you're going to be looking at a chart. Okay. You can look to buy rips into demand, like where stuff kind of falls out of the sky, like on Ford here, here's a double bottom, right? We fell out and a double bottom. So we know this is demand because of how we bounced out of here. We had buyers step in. So we're going to look for, where are the buyers? Okay, well, came down, here are the buyers, right? Here are the buyers. Now, here's another example. You can play a break structure. So in this example, here's your structure that got built out. We broke above. Okay. Now, what happened to all these sellers? They became buyers. Where are the buyers? If we're looking to trade the upside, where are the buyers, right? Where are the buyers? So if we're looking to play the upside, we broke out of here. What happened? We retested all of these sellers, right? We talked about supply and demand and balance and understanding that type of behavior in the last two master classes. So go into those two master classes after you watch this one. This will definitely help. But if we create balance here, and these are sellers, okay, then they become buyers. So what are we looking for? We're looking for that break of structure into where there's buyers. So you can have buyers where you have fall into demand, double bottoms, etc. You can have break of structure and retest, okay, to find structure of where buyers are because they need to hold and move the market. We just participate in the market. Okay. Those are really the two major setups that I typically watch on the swings that we trade. Okay. Is there any just questions on those two things? Identify where the buyers are. Okay. Double bottoms or just bottoms that happen. AMD is a good example. Okay. Okay. Demand. This pullback was what led us to all-time highs. There is demand there. Okay. There is demand. Cool. Boom. What happened here? What happened here? What are we looking to be a buyer at? We're looking to be a buyer where there are buyers. Okay. We're looking to be a buyer where there are buyers. Here's a perfect example falling out of the sky right into a demand. Okay. McDonald's. I'm giving you these examples. Same thing. Buyers. Okay. We fell out of the sky into buyers. Okay. Now, did we create some balance? Absolutely, we did along the way. Okay. But ultimately, buyers stepped in where they needed to. Okay. So now you have the break. And now what do we have forming here, folks? What do we have forming here? This is a daily time frame. Okay, guys. Also, on a lot of these swings, if we're looking to swing something, that means we're looking to ride the wave. We're looking to ride and catch the bigger move. You're going to be on a daily time frame, a weekly time frame, a monthly time frame. And then from there, you'll go down to a 1 or maybe a 4-hour time frame. And you'll be able to identify from there where your entry points can be. Okay. But looking here, right? Looking, can just see, here's another one. Now, what are we having here? Look at this balance playing out here. What's happening here now, folks? We're breaking structure. Here's your structure. Okay. What happened to all these sellers right here, guys? What happened to all these sellers right here? What are they now? Buyers. Perfect. So is McDonald's maybe going to go on the watch list now? Right? We were able to buy the lows here, right? We bought these lows a few times. Okay. Okay. You can see balance, right? Buying at the lows where the buyers are. This is all demand here. Now we're breaking out. So we're going to want to watch a 262 retest. We're going to watch this 262 retest. Okay. Let's talk about IWM. Okay. Let's talk about IWM. What did we notice here when we took this trade? What was building out just right here? Do we see this balance building out? Everything was getting really tight in here, right? You can even draw some trend lines on there, but we noticed everything was getting tight. But what did we notice on a larger time frame here? Balance, break of balance, consolidate above balance. Buyers, basing. This is a monthly chart. You guys know this chart exists? This is a monthly chart. Okay. So we saw this consolidation here on the daily. What did we see? Every time we got to 198, buyers stepped in. Every time we got to 200, buyers stepped in. This thing got tighter and tighter and tighter. And it ultimately ended up breaking out to the upside. Why did I think we were going to break out to the upside? Well, structure. Structure, right? I just showed you this monthly chart, right? Sorry. Whoa. I'm not sure what just happened there. You guys are seeing this. What? That's not what I wanted. Structure. Break out of structure, base above structure. So what does that mean? All of these sellers for a year, 2 years, all of these sellers for 2 almost, okay, they became buyers, had to become buyers. Zooming out, okay, zooming out is going to show you what the larger picture looks like. Okay, what the larger picture looks like. Look at this. The supply that pushed us down, right, out of this balance is exactly where we stopped out today. Why? Because if you only would know this 227 level would exist, right? If you zoomed out and you looked left. Okay. Let's look at cat real quick. I'm just going through a couple old swings that we saw. Okay, what did we see here on cat? You guys remember this, right? Remember this swing cat? We saw balance, a dip in, but nothing where buyers had not been taken out here, right? This is its own balance, right? This balance before it made the rip to highs came in here. Yes, it dipped a little below. It's not going to be perfect. Nothing in the market will ever be perfect, guys. But what did we see? A dip into liquidity and bounce up and continue to base where we ended up getting in here, right? Where we end up getting in here, right? And what did we know? How did we structure this trade? I really wanted to see a daily close below 223, right? Although we had a couple days spent below, easily had buyers defend below lower, and then we had a rip higher. So what was the trade plan here? Okay. We wanted to accumulate in here for the rip and move higher. Okay, we got that. Okay, we got that. Or you could have taken a break over 335. But just know when you're taking a breakout, you're going to be paying for more inflated premium. So it's higher risk to be buying near where the buyers are. But at the same time, when you buy near where the buyers are, you're able to buy where you're going to place your stops. Write that down. Buy as close to where you would place your stops. Okay, buy as close to where you would place your stops. Where would your stops be here? 245. You want to buy as close to them as you can. You want to buy as close to them as you can. Okay, alleviates a lot of the drawdown you're going to see. Okay. Oh. On this last, I mean, we took IWM a bunch of times in here, but on this last one, we bought it 198, 190, or excuse me, we bought it 200. Okay. 198 was our invalidation zone. We bought as close as we could to it. We could buy down into it. Okay. Does everybody see what I'm talking about? All we're looking at is where are buyers present? Where is balance forming? Where is structure forming? What did you guys notice on cat? What do you guys notice right here? We took this trade to the upside. What happened? What happened after this thing ripped 30 points up? Somebody type it in the channel. What is this called? What's this? Yes, it hit supply. Okay. What is this called? Yeah. Retest of what? Nope. I mean, technically, yes, of the trend line. What is this? Is this structure? Is this balance? This is structure. Structure is balance, equal buyers to sellers. We break out of structure. This is now an imbalance. Who is favored here? Who won this battle? Okay, who won the battle? Now we have an imbalance of buyers, meaning there's greater buyers than sellers. It's going to run it up. Market wants to fill all imbalances. Go back and watch the balance video in the masterclass a couple weeks ago. What happened? Came down and retested it. Would that be a trade plan, trade idea? Absolutely. Right? Yes, guys. Okay, save me Jeebus. Yes. Guys, everything is relative. Everything is relative. What happens on this time frame is exactly what would happen on something like this time frame. Intraday balance, break out of the balance, back test, back test. There you go. Right? What is this? This is a test of demand. This is balance. This is balance. Come on. Buyers dominated, back test, pick up more buyers and go. Okay. There you
Yeah,
go.
so in trading, anything that you learn, it is all relative. Whether it is the weekly chart, the 1 second chart, it's all the same, right? Nothing changes except for the speed of the trade. That's it. So I know, especially in the beginning, you're like, oh, I think how to day trade is different than swing trading.
It's
It's
the
not.
same thing. It's
It's
literally the
it's
same thing.
literally we're looking for the same exact things, right? There's no difference in finding a swing and between that or a day trade. The only difference is smaller time frame, you're in and out faster. That's
Mhm.
it. But the principles of why we are buying or selling is going to be the exact same, right? Nothing changes. Nothing changes. EMAs are going to be the exact same thing.
Mhm.
Swing trading or day trading. So the
Yep.
EMAs that we talked about going to be the same, right? Personally, EMAs are lagging indicators, supply and demand, right? EMAs are great, but they are lagging indicators,
Mhm.
um, supply and demand. And then
Supply and demand, guys. Exactly.
we had another question that I wanted to. Okay, is it considered an A plus setup? So A plus setup is
It's
going to be
relative to
different.
you. Yeah,
Yeah,
it's
it's
relative to you.
you find out what your A plus setup
Yes.
is. That there is no this is an A plus setup.
Yeah.
That's a personal thing that you have to find what your A plus setup is.
A breakout and retest of structure is just showing you that this is an area where we should see buyers or sellers step in. Remember, we are market participants. We are not market movers. Okay. We are market participants. We're not market movers. So, like on the cat example, that's not cat, right? On the cat example, okay. Yes, this is a good setup, breakout, and retest. All we're doing here is saying, are we going to see these buyer or these sellers that turn to buyers um, try to respect this level? So yes, all you're doing is waiting for your level. No level, no trade. Usually that's a great setup, right? Usually that's a great setup. If you're waiting that, I want to see 335 if the buyers defend that and we can hold on this retested structure. Yes. Yes, exactly. But buying up here where the sellers are, that's not an A plus setup in anyone's book. I don't care who you are. Okay. But looking at that, it's all dependent off you because somebody has A plus setup is 312. I have to buy it where the last demand was. Well, this showed us, okay. This showed us, okay, that it's not going to let us get lower. And we're actually going to consolidate here, which is accumulation at this point, which tells us, okay, we're not going to be able to get that low. But we're going to get as close as we can to it. Anytime we get close to it, we're going to add, we're going to get into it. Right. Yeah. CETA, perfect example. Where's somewhere we thought buyers or sellers would step in? Okay, break of structure, back test, did not hold, rip through. That's going to happen. That is going to happen. Where was the next area we wanted the buyers to step in? 180. They did. Good. Perfect. Okay. So, why is buying time so important here? Why is buying time so important here? Okay, that's the next thing. Because we're not having to have the move happen right away, right? We don't know how long this consolidation might last. But our thesis here is as long as buyers defend our demand, okay, as long as these buyers defend our demand, we should be able to see upside, okay? And if we're underneath 312, then we're wrong, and we're wrong. That's okay. We're going to be wrong, i.e. last week. Let's look at Nike. Is this not balance? This is balance. Okay. Did I not have a strict game plan that if we closed underneath this weekly low, I would be out? Sure. Did it happen to pop up? Sure. Absolutely. Absolutely. So somebody asked something about something about stop loss. Stop losses, guys. I do a daily close. I do a daily close. That doesn't mean that we can't have liquidity grabs like this, but it's hard to know. It's hard to know. For me, this type of candle would see that's a long momentum candle breaking under a weekly demand. To me, more than likely, we can see continued downside. That's why I got out. We didn't. That's fine. That's going to happen. You're going to want to buy where you think buyers would step in and they don't, right? You're going to buy where buyers would step in and they don't, and it continues. That is going to happen. Okay, that's going to happen. Neto, you asked a question about using moving averages. I don't really like to use them for entries and exits on swings. As far as continuations on swings are great, but you're only going to want to use those in a trending swing. So like IWM just trended right back into its ADMA here. So you could have noticed that and kind of looked to buy this dip into this, but that's a whole different strategy in of itself. You're playing an EMA versus just playing where buyers and sellers structures can be, right? Because look, did we dip a little bit below this EMA? I mean, at the time, yeah, it was probably a lot below, right? So yes, you could use it. I would more so use it on trending stocks and understanding when you're going to be taking a trade from lower and maybe staying in with runners for me personally. Okay. Okay, let's talk about how much time till expiration. At least a month. At least 1 month. Why not give yourself 1 month to see if you're right? Right? Why not give yourself 1 month to see if you're right?
And I will say this, right? Contracts definitely can be more expensive.
Mm-hmm.
Um, but you got to think, right? If I'm buying usually premiums, let's just say at around a
Mm-hmm.
dollar, and I buy 10 of them, right? And then, if you're using $1,000 on a swing and the contracts are $5 premiums, then maybe you just buy two contracts.
Mm-hmm.
Right. So yeah, sometimes, yeah, swings, they are higher premiums,
Yep.
but you got to think about what time, how much monetary do I put into a trade? If it's typically $500, $1,000, right? Then I don't have to go buy 10 contracts at $5. I think
Yep.
it messes up a lot of people because they're like, oh, it's super expensive. But is buying one contract still within your range
Yeah.
of what you normally would trade? Okay, then 20% on that $500, whether you bought 10 contracts or one contract, is
Yep.
still going to be
It's still
20%,
20%. Exactly.
right? There's nothing changed.
Exactly.
And in fact, you're going to make more because you have less contracts.
Yeah. So you're paying a less commission, but you're not paying the mental tax.
Yeah.
You're not paying the anxiety tax. with day trading, guys, you're looking for a move to happen immediate. In swing trading, you're looking to buy lower and sell higher. Okay, you're looking to buy lower and sell higher. Very simple on which strike to buy. We talk about this in one of the previous master classes, but always ask yourself this: can this go in the money? So we had NVIDIA calls. We bought 115 calls. Why did we buy 115 calls? Well, before before all the way over here, I think, before we get to here, do we think we could trade back to 116 or 115? We had the 115 calls in over two or over a month and a half, right? Because 920 is the expire. Do we believe that can go in the money? Well, with how NVIDIA moves, absolutely. Why do we think we could go in the money there on this, guys? What happened here? What is this? Come on, guy. Is this structure? Did we break down from structure, balance? Thank you, Jesus. Well, that went really well. Jesus, Jesus. Uh, we broke out of balance. No, what? It's just balance. Yes, it's sure it's a double top, but it's balance. This whole section. I'm not talking about just these two things. I'm talking about. I'm not just talking about those two, which isn't even really a true double top. Just talking about this whole entire area. What did NVIDIA do up here? It balanced, right? It balanced. Equal buyers to equal sellers to equal buyers to equal sellers. Then we broke through. We went down and retested a huge structure here. Okay. This is why we bought. Okay. It's a range, balance, whatever you want to call it. Yes. Some people will call it chop, whatever. So if we knew buyers were going to step in this area, that was our game plan. Under 106 down to 100, I wanted to be a buyer. If we knew buyers were going to step in here, okay, where would it likely go and retest? Right here, right? 116. There's an imbalance of sellers. We found buyers. Buyers going to take out and balance us back into sellers. So what could happen? What could we see happen here? Can this become? Could we see this become its own balance right here? Could we? We could. I'm not saying it's going to happen, but we could. We could see this happen. We see how big this test was here today, right? Because why? Sellers dominated right here. Sellers took out the balance that was going on up here, brought us down. We bounced. We went right back. So 115 call. Absolutely. Can it go in the money by your time? Yes. The second thing is look for strikes with high open interest and high volume. We went over that in a few masterclasses before, but that'll save you. Is this strike liquid? By saying is this strike liquid, you're basically saying, are other people, do they have the same thesis I have in mind? If there's a ton of open interest and volume on those day after day after day, then likely yes. Right? Plus it's liquid. You can get in and out of it nicely, and the spreads are usually a little bit tighter. Okay. It just makes it a little bit easier. But always give yourself at minimum a month. Minimum a month. Okay. Give yourself at minimum a month, and you're going to be okay. Okay. Let's go over what name. Oh, AMD. Right? 160 call. Well, came down here. If this thing moved from 187 to 134 in 2 weeks, 50 points in 2 weeks, do we think we could go 30 points back to 160 in a month and a half where we know demand is? Absolutely. Perfect. Was that strike very liquid? Absolutely was. Perfect. Okay. The next thing I do want to talk about, getting into a swing trade. Okay. Now, this is going to vary by different account sizes. Okay. This is a perfect example I'm going to use right here. Yes, I wanted to be a buyer at 133, but the market does not work to the penny sometimes. It just doesn't. I hate the burst your bubble. It's just not going to. Okay. But can we see, right, that this is demand right here? Like we can see that, right? This was demand. This is what let us run up to previous all-time highs. So there's a lot of buying that happened there. What do we think was going to happen if we got down here again? They would probably get in, but we would need to get previous demand here. Okay. So that's why I said under 143. Okay. We want to see a move back down into, right? $133 to $136. We said we want to be a buyer in these areas. Do you factor volume in on your entries? Yeah, on shorter time frames, sure. Yeah, you want to see some sort of hammer candle or something, but you can't figure out the daily volume until after the day is done. Right? So that's why you buy as close. Where are you going to be stopped on this trade? 133. Buy as close to where your stops would be. Okay, so you have minimal drawdown. But sometimes you're going to have days like this one where we drop down and we don't 136, we don't quite get to 133. Would it be okay to buy here? Sure. It's better than buying here. You can buy a little bit closer. So if you have a large account, if you have a large account and you can scale in your contracts, just buy as close to where you can be into a trade where you have some risk on, because 136 to 143, 7 points in a day and a half. It's not a bad trade already. Did we dip a little lower? Sure. Is our trade thesis invalidated here, guys? Is the upside trade just because, let's say we got in on this candle here and we dipped lower? Are we wrong? Were we wrong? Those contracts were down 25%, 30%. Were we wrong? Where were we wrong, guys? Where will we be wrong? No, we're just and did I completely full port degenerate stupid Twitter? This guy said buy, put the house on it. No, we did not do that. We got in here and you could have, this is a zone, guys. Basically, I'll ask you this. Where would you want to buy? It's just in here, right? Just in here. So this is what allowing you to buy time, because anywhere in this zone is a good place to buy, because when we're back at 183, are we going to care if we bought at 143 or 133? Right? No. The only reason we'd care buying at 133, 143 or 133 is if you oversize in this zone. You don't have an invalidation zone. You don't actually have a trade plan, right? We do see drawdown, but the whole time you just weren't zoomed out enough. You were looking at this chart. You were seeing this. Oh my God. You know how many people yesterday, AMD? Oh my God. Oh, they beat up AMD. Oh, it's such a shit stock. Oh my God. Well, look what I saw. I say, look where I'd want to be a buyer. 140 to 143 on the back test, right? We sold into supply on this back test. What happened? Is this not a little bit of its own structure that just got built out here? And now we just came back down and back tested it? How many people admit that they don't zoom out? They don't have any clue of what the bigger structure of the stock is that they're trading. Okay, guys, write this down. Zoom out, look left. Zoom out, look left. You want to know a stock, know how to find a stock to swing? Zoom out, look left. Look at this structure. Breakout, retest the structure and go. Retest the structure. But you guys would never see that if you're on a smaller time frame, right? If you're on a smaller time frame. This is a weekly chart. Yes, charts exist above the 5-minute chart. You should try it out. Just try it out. Okay. But even here, even if you're on a 5-minute chart, I mean, you can still see this structure. It just looks as, but a lot of you guys are just, how would you know if you're just looking at this? How would you know where to long? How would you know where to short? If this is all you were looking at and you have any concept of this, how would you know this is a buy? You wouldn't, right? You would just see this and say, oh, this is so bad, so bad, so bad, so bad. Guys, stocks are going to go up and stocks are going to go down. How do you think you buy something on discount? It has to go down first. That doesn't make it a bad stock, right? That doesn't make it a bad stock. Zoom out, look left. I don't know what just happened here. Well, that was not good. Okay, zoom. What in the world just happened? If you zoom out and you look left, you'll see there was my buy. SPY. What would you guys call this? What is that? What is that? What is that right there? Candles moving sideways, chop. Equal what to equal what? Equal buyer to equal seller. Balance. Break of balance. We are now at an imbalance on the daily as it runs up. Buyers have overtaken sellers. We are going to retest that balance. And now there's a buy. Does everybody see that? It's all relative, guys. This happens on a 5-minute chart, on a 1-minute chart, on a 15-minute. But what is more important is figuring out where am I going to participate with the market movers, i.e., where are the buyers? Where should they step in? That's where I want to be hanging out and try to ride the wave with them. Do you think my buys right here did anything? No. Yep. There was a gap fill here as well, but ultimately there was sellers right here. These were all sellers until they weren't. Buyers are likely going to defend this area. And it happened. Okay. You don't know if any area is more strong than the other. That's why we use stop losses and validation zones. Guys, stop looking for that holy grail. There's 100% indication. It's never going to happen. It's not there. But if you can buy as close to where big buyers were, okay, you're going to be okay. If you diddle in the middle, though, it's never going to be good. Right? It is never going to be good. QQQ chart wasn't quite as clean as the SPY chart. Right? Wasn't quite as clean as the SPY chart. What was clean here, though? A break of what structure today?
68, baby.
Okay. Structure. Breakout. Uh-oh. What's happening here? As long as 468 holds, guys, what happens here? Who's in control? Who's in control? Buyers. Exactly. Exactly. Do you guys see how this is just really turning into our balance masterclass from the other week that Justin kind of led a little bit more in depth on a smaller time frames, identifying the intraday levels and intraday supply and demand that happens on SPY and QQQ and those names. All we're doing now is just doing it on a daily time frame, weekly time frame, monthly time frame. Give yourself 1 to 3 months. Buy at a major level where you think we could get to. If I was to long swing QQQ down here, I would absolutely think that 473. So I'd look at 470 calls and 475. I'd see which has more open interest, and I would think we could probably get back there rather quickly. Imbalance created, buyers found, likely go test the imbalance. That's what we did today. This just happens on a larger time frame. So guys, also, if you know you're able to catch a pretty big portion of the move, sizing down will help you too. Sizing down will help you too. Always remember this. Always remember this. Okay. If for some reason you woke up and every position that you were in was at 0, would you be okay? Would you still be able to trade that day? Would you still have an account? Okay. If the answer is anything but yes, okay, you have too much size on, and you need to figure out what is the correct sizing for you, or what is the correct risk tolerance from you. We went on a 20-0 run in like 6 weeks, maybe. Had 3 losses in a row. It hurts. Absolutely. What was working didn't work anymore. Okay. Well, no, it still does work. We just needed to do it a little bit lower. No problem. Did those 3 trades out of the if those wiped you out, you were just sized far too big. Okay. And it was going to happen inevitably. That was going to happen. Right. I mean, CALH, same thing. I really wanted us to hold this area. We didn't. That's okay. Okay. That's okay. Pop back up. That's okay. You're going to have a market loss like that. You're going to have a market loss like that. It's going to happen, guys. I wish I could tell you and sit up here and tell you I will never, ever, ever, ever lose a trade ever in my entire life. Follow me. You'll be guaranteed to be a giga gazillionaire and everything will be great and life will be fantastic. But that doesn't exist. Guys in the MLB strike out 70% of the time, and some of them are still in the Hall of Fame. Steph Curry shoots 40% from the field, from the 3-point line, which is outrageous. He still misses more than he makes. It's not what you make, it's what you keep, guys. Does everybody understand that this swing lesson literally just turned into a balance, just finding balance on a higher time? Please tell me everyone understands that. I still think CELH is actually a perfect candidate here. I wouldn't even mind it a little bit lower. But this area, if buyers are going to step in, this is good. Everybody understands that, right? All we're doing is identifying balance areas. We're trying to figure out, where are the big buyers at? Where are the big buyers at? When we can find where the big buyers are at, we can identify a trade plan around that area.
Because guys, what do I always talk about? Let's break trading down as simple as possible. What is it? Just a battle between buyers and
Yep.
sellers.
Yep.
That's all it is. We definitely always tend to overcomplicate it
Mm-hmm.
with, and I need indicators and this, we're always looking for, ways to make entries and make exits. But if you just
Mm-hmm.
break it down to this level,
Mm-hmm.
where are the buyers? Where are the sellers?
Mm-hmm.
Right? It will slow everything down for you, right? It will
Mm-hmm.
simplify it for you, right? It won't be so stressed out
Yep.
trying to find a trade, trying to take a trade.
Yep. 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 What did we do? What did we do yesterday? Why was this morning so easy? Buyers here. Nvidia. Everyone said, which I thought was really odd. Why are you buying? Why are you buying? Well, huge structure breakout and then another breakout. I'm just buying where these buyers sent this thing 500 points higher. I'm going to buy here because I'm pretty sure they're going to defend. Did they? Absolutely they did. Did the swing happen overnight? Sure. That's great. Perfect. That's great. Sometimes it takes a little longer. So the beauty of swings, guys, is it's a little bit slower pace. I mean, it can't be like an AMD or NVIDIA. Obviously, with earnings, it kind of changes things a little bit. But, like with the cat swing, guys, this took, how many of you guys would have freaked out? I'm pretty sure we bought on this candle right here. I think it was 325. It was this day, I remember. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 days of sideways. Did we go up a little bit to 335? Absolutely. But 11 ways of sideways. Okay. Would you guys have freaked out here? We were moving sideways. Would this have freaked you out? Little wick down. Okay. The only way it would ever freak you out, cat went way over 300%. We had it for $4. They were at 20 something, I think. And I think Lisa or somebody held it all the way through like a degenerate. But they went, I remember seeing them over $20 per. Um, yeah, these things. 318 bottom of the Wickwoods. Okay. That's why you let the day play out. What if they're just needing to pick up some more buyers? Right? Just need to pick up some more buyers. Cool. It's gonna happen. Yeah. Oh, Nadia. Yeah, Nadia did. Thank you. Yeah, Nadia. Kelly, yeah, I don't know. I think it was Nadia. She took these. She sold. I'm almost positive she sold on this candle right here. Insane trade. Perfect. Perfect. Guys, the market is designed to grab liquidity. It's designed to fill imbalances. It's designed to get you to lean one way and pop it back up.
Manipulation.
Remember, you guys remember?
Everybody, I would
Oh,
look
yeah.
up wick off. If you
Yep.
haven't, look up wick off. Wick off. Google that as your
What
homework for tonight.
what happened here, guys? Remember we were holding this McDonald's trade? This was like we took it once, we took it twice, and then we started to take it here a third time. And I said, I will add down into 245. What happened here? We went down $1.50 right here. Was I freaking out? No way. I said a daily close under this level. Okay, this is my stop. Well, popped right back up in the nick of time, and we rode that mother to the top. Now, what's your trade plan here, guys? What's our trade plan here? If you guys had to make a trade plan on this chart, okay, equal buyers and sellers, which is called balance. What are we looking to see happen? What happened? What are we thinking that happened to all of these sellers right in here? Yeah. What are they? What do we think that they become in here? Dink. Now are you guys seeing it? So now, even into a little bit because market does not work to the penny. That's just not how it works, guys. We could see, I would think, even into 260. If this area holds. Okay, 260 to 262. This is what I'd be watching. Wouldn't it make more sense for the market makers to think, oh, everyone has 262 marked, so let's just take it a little bit below. Everyone gets short. Buyers really step in, take it higher. The market needs liquidity to do anything. All right. So, guys, literally write this down, or I'm going to repeat it. First things first, as a market participant, we're going to find where the market movers are. Okay. And if we like to play the upside trade, we're going to look to see where the buyers are. Okay. We're going to look to see where the buyers are. So that's going to be areas of previous demand. Okay. That's going to be areas of balance. Okay. And that's going to be retest of balance. Those are going to be like the three things you're going to watch for. Okay. Netto, perfect. How do you identify this, though? How do you identify where the buyers are? Is this chart going to help you do it? This one? You're going to find all the buyers on this chart? I'd say you could start on a monthly chart.
Yeah, the top down approach for sure is
Start on
one
a
of the
monthly chart.
best.
You
Yeah.
would see here instantly, oh wow, this 245. Okay. Yeah, is there some demand a little bit lower? Sure thing. Well, let's go to the weekly. And you're like, huh, okay. Well, last time we were here, what happened? Buyers were in control. Well, I'm gonna look to be a buyer down here. Say to the daily. Okay, cool. So now we've got our 245 level and 250 level. Because we can see that. Okay. And then you can look to make a trade plan from there. You can go to a 4 hour, just able to show you a little bit more of the balance with more candles, right?
This
Go to
kind of
four.
goes into what Chris kind of coined is what is this chart telling us to?
Mm-hmm.
It's telling us, somebody type in chat, what is it telling us? See if somebody picks up what I'm trying to
Oh,
lay
shoot. I'm
down.
sorry. I keep messing this up.
It's showing us correct consolidation, right? But
Yes, I know
it's
what
showing
I
us,
don't want to say it, but
I know,
I know what you're trying to say right now.
showing us it can't.
Where is it? how does it tell us where it is going to go, guys? What does it show us before? What does it show us before?
By where it's not going. Yeah.
Ah, atypical, baby. Gino, perfect. Gino, also good to
You
see
were
your
all
name
right
here. As you
though
name
in
here,
what you were
bro.
saying,
You guys are
consolidation,
all
all that. Yeah.
not wrong. Sometimes, guys, the market needs to show you where it's not going to tell you where it is going. Let's see if I'm just look, even if you let's have the market show you where it's not going. It's double bottom. It's not going down. Then it's going to go up.
Because what is, so let's break this down a little bit. What is this telling us? Obviously, sellers are present, right? We have sellers, they're present. They tried, they try again, right? And so if sellers are keep getting hit at a wall at a
They're
certain
trying. They're
level
trying. They're
or with
trying.
the zone, right? What are those sellers? Those sellers are going to be absorbed by buyers.
Mm-hmm.
They're going to get weaker. And typically, sometimes this does break through to the downside, something like
Yeah.
this. It can happen. Absolutely.
Oh yeah.
But what is this showing us? It's showing us that sellers keep trying, and they cannot push this down. So if they can't push this down, typically buyers are defending
They're
it.
gonna.
And if we
They're gonna.
can't go down,
Yep.
more often than not, it's gonna go up, right?
Bingo.
So it's not gonna be 100% like
Mm-mm.
that all the time.
It's not, and it's not gonna be as perfect or a great chart, but same thing right here.
But definitely same idea
Brought it
to
down.
just
Yeah.
keep in mind. Same to the upside. We keep
Mm-hmm.
trying to break to the upside. We keep trying to break to the upside. Okay, we can't break. Okay, probably going to at least head back down to the next level before we can at least break out, right?
Mm-hmm.
So it goes both ways, but yeah, the market will tell us where it wants to go by telling us where it doesn't want to go a lot
Yep.
of the times.
And so you have to let the market show you that first. What do you guys see right here? This is gonna be on the watch list. Come on, guy. Guys, see we have some balance, right? Well, buyers couldn't get through here. Sellers were strong. Where might we go from here? Right? Because what would happen right here? Who would we be picking up? Who would we be picking up? Remember, guys, what's our thesis? What's the trend of IWM right now? What's the trend of IWM? The macro trend. This is pretty bullish, right? So upside, correct? So I have a long thesis on IWM. Okay. Where do I want to try to be a buyer then? Yes, it's already, oh, well, you should have bought down here, Chris. Okay, well, yes. Well, look, we're already up here. Where could we still be a buyer to still see more upside? 215. It's the bottom. Okay. Because if we're going to break through this and break through the sellers up here, we're going to need some more buyers. So where can we look? I mean, also within this balance. So there's balance within balance right here. I mean, even just this right here, let's go to like a 4 hour. You can see a little bit cleaner. So yes, this is a larger balance, but the last few days has been really holding this 221. Yeah. So we could easily, if this has a ton of strength, we could test this tomorrow. It holds and we could go right back up. Absolutely. Ideally, though, you guys how I use the word ideally in a perfect world. That's what I was, in a perfect world, I'm a buyer here. In a perfect world, look at this. I want to buy. Wouldn't you want to buy this? Retest the 212? Absolutely. Right? But sometimes it's not going to happen because why? The market's showing you it's not going to go down. It's not going to go down there. It doesn't need to go down there. Sometimes it's going to show you that. So then, just like here, I wanted this breakout and retest lower. It didn't have to go down there. And now we know big buyers have stepped in here. Now this is a level. Okay. And we can see 215 is going to be a level. Right? So everybody sees this now. Everybody sees all we're looking for here is where are the buyers? Where are the sellers? Plan your thesis. Find out where you want to be a buyer as close to where the big buyers already are, right? And then proceed from there. All right. All this is, guys, I told you, I don't know if you guys are coming in thinking I was going to have some magic sauce or some, you know, special secret Krabby Patty formula or something. All we're doing is identifying what the big boys are.
Yeah, so you'll see us, a lot of times we'll keep talking about the same things. Maybe we say something new or in a different way that, kind of gives you that light bulb. But it's the same thing. And so over time, you will be able to see what we were seeing, right? Because it's just the same thing really over and over and over again. But it takes time to like actually see. Because I know when I first started, I'd look at a chart like this and be like, I don't know where support is. I don't know where balance like it is really hard to like find good levels when you're first starting out, even for a while after you start out. You'll think you'll have it, you have some levels, it breaks through. You think you'll have a good demand or a good supply, it breaks through. Um, but eventually once you see charts, you see the price action day after day for years, it'll just become second nature. Like at obviously we draw our lines still because it's great to see them once we go down to the smaller time frames, but you can look at a chart and you technically don't even need to draw any lines, right? Because you'll just be able to see where the balance is, where the support is. Um,
Exactly. Do you take, this is a good question. Do you take profits? I take or excuse me, do you take target profits or do you have profits based on percentages? Both. Both. It's whatever really works for you. You could easily just say, I am holding from this balance until we get to 364. If you're okay with that, do it. But if you've got 30, 40, 100%, 200%, I like to de-risk, make the trade free, get your stops to even at that point, right? Because once you break in that balance, or your new stop could be the top of that balance, it's all up to you. I like to trim into strength. We coined the word abscess, always be selling into. Why? Because you could the market, could news happen? Could something happen where it just reverses? Absolutely. Absolutely. There's nothing, the only thing that is guaranteed is that there are no guarantees in the market.
Especially if options, time is not on your
And
side.
time is,
Whereas if you're
yep,
just buying shares, you could
yep.
literally hold it for 1,000 years
Mm-hmm.
if you lived 1,000 years, right? You can hold it forever. Options, right? Time is not on our side. So yeah, de-risking, selling into strength, it should be done, right? Because you never know what's going to happen. We do have our targets that we want to hit. But what if it
Yeah.
doesn't hit the target? Time's not on our side. So
Yeah.
it could hit
Mm-hmm.
the target 2 months after your contracts expire, you're screwed, right? You
Yep.
you don't have them anymore. So yeah, taking profits, I like percentages a little bit better than levels. But once you come down to runners where the trade is free, then you can really go to, okay, I
You could
want to
say,
hit this
I
target in
want to
this
hold up to
level.
here. Yep.
Yeah, so I'd say definitely use more percentages when it comes to taking profits,
At least trimming.
at least
At,
trimming, yeah.
at
And then
least
coming
trimming.
down to runners, then you can go so more for the level, right?
Yeah.
For the level. You'll see me always, I'm holding runners until this level, or I'm selling fully out because we've hit this level, right? So I still use levels
Mm-hmm.
as my targets, but I'm still trimming along the way into that, because again, time is not on your side, especially on a swing like this. Yeah, if you're looking for 360 as your level, it's a pretty big move, right? Pretty big move. And then during the day, if you're day trading, right, it's better to just take those profits because the level may never get hit and time's just not on your side. So take profits.
Why did you mark the level at 361.34 and not 365? What was the candle that took us out of? Well, last time we were here, where is this the biggest red candle? That means there's the most sellers there. There's the most supply. Look where we went to. Look right where we went to on these first two candles. If you were waiting to hold till 365, well, we only got to 362 here. That's a perfect Justin example. We didn't get all the way to 365 exactly. And then you would have seen this next candle. We dropped down, 7 points off that candle. You probably would have panic sold. You know what I mean? Like, just sell into strength. Look at what was the last time we were here? Where's the biggest red candle on a 1 hour, 4 hour, or even a daily? That'll tell you that's where you're gonna run into those sellers or the buyers, or the same thing with the buy side. That's where you're gonna run into buyers as well. Like same thing. Oh, Chris, how come you didn't buy at 312? They didn't let us get down there. Sometimes it's gonna happen. They didn't let us get down there. Right? How many trades should we make every day? I don't know if you're being serious or trolling or not, but just by you asking, probably not that many. Uh,
One trade or less is all it
uh,
takes.
one, yeah, one to three max. It depends. Are you swing trading? There's not going to be a swing trade available every single day. I mean, I guess there can be, but really good setups where you're buying where the big boys are, probably not.
In the very
Right.
beginning, it's
In
it's
the very
definitely
beginning, do
the
one.
less you do
Yeah, the
is the
less is
better.
yeah, less is more for sure.
And
Uh,
as you know, as you advance, right, you can take more trades, but in the beginning, it's all about less is more. I would just focus on one solid trade a day, and that's it.
yeah, Jay Collins is right. The best swing trades become day trades, right? Like you buy such a big level. You buy at such a big level, like the video. You just buy at such a big level and it pops up or whatever. But that like all the move happens because there's so much buyers surrounded. You were so good at identifying where all those big buyers are going to step in that you go 100% whatever. You could just trade as a day trade and be in and out, right? Um, yeah, Gino came a long way. Gino used to do 5 or 6 in a day. The mental capacity. Yeah, guys, it's hard to. I mean, you can. It takes a special person. We got people in our community that are great at it that can, but you're tired at the end of the day. At least mentally, I am. And even just like this morning, there's like 3 swings you have to manage right on the open that you have to sell, and they're all big size and then like, what if you have like 10 swing? It just becomes a lot tougher, right? 3 to 5 swing trades open max with at least 1 to 3 months max. So, if you're getting in 1 to 3 a week, that's pretty solid. You know, less is
What
definitely
yeah, less
more.
is more. What percentage are you looking for? We're always looking for we're looking for 20%.
I think
20% is that, golden rule, but
mhm,
10% is good. Sometimes I would trade at 5% or 8%.
yeah.
It just really depends on the price action that's in front of you. If it's starting to look weak, contracts aren't really moving, anything like that, that is a big red flag. It's like, okay, got to get out of the trade, right?
Yep.
Um, but we're definitely looking for 20%. I mean, I think that's the golden
Mm,
percentage that we're looking for,
yeah.
right?
Yeah. And
But if
I'm not, yeah, go. Sorry.
this is what I would do, you're starting to be green, uh, turn your stop loss into break even. So that way you're up 10%, you can start trimming. But if you don't
Mhm,
have any to trim, you could always put your stop loss up to break even, or just under so that it protects you if it does fail.
mhm.
And that's one way to protect yourself. We are looking around 20% on the trade. That's like kind of my golden percentage.
If you're in a swing trade when stock go the right direction, should you well, no. Do you want to double your exposure on that stock? You want to double your exposure? No, you're already in the swing trade. Because you're looking for that exposure, right? You can, but by the way you're asking it, you're making it sound greedy. You can do that. I personally don't, but you can, right? Do you guys mental stop or hard stop? I mean, basically because like the levels of the invalidation is more so a mental stop for me. Um, it'll be a hard stop after the trade has really gone in profit when it's at a break even. That's more of a hard stop.
Yeah, I'm
Like actually
same way.
stopped in the ladder where I'm like, okay, runners are like whatever percentage. Like my like XLF every day I wake up now that it's gone like 80% plus or whatever, and now there's only 3 contracts left. Yeah. I don't really have to worry about my stop as far as like 4260, right? 4260. But because we're so far above that, so now it's just at zero. Or is that I'm at zero. It's at break even. The thought process on when to average down, when the trade is still validated. Yep. You can buy on discount, but the trade is still validated, meaning you're still above your stop loss. But when you buy as close to where your stop is going to be, it keeps you from having to possibly average in a lot. The only time you have to average in a lot is if you're not buying where your stops would be or you're diddling in the middle. But yeah, only average down if you're planned to average down as well. Like a lot of my trades are starter trades. I'm getting in a little bit. I have exposure on in case the trade goes nuts right away. But if it doesn't, it goes down a little bit and I can get a better entry, then I can. because my risk tolerance allows it. If you went in full size on your first entry, then you cannot average down, right? You cannot average down. Do you want to have 1K of exposure? So the entry swing and entry day trade are the same. Size line 1K or 2K, 1K. Okay. How to split money between just choose one. Either day trade it or swing trade it. And only use half the size, just one. Stop oversizing. Next time you're going to look to day trade something, guys, ask yourself, would I swing it from this level? Would I swing it? It'll probably keep you from buying a level that's not a real level. Yeah. Woody, you know that. You know that. Why are you asking that? You know that, dude. You know that question. What is that? What is that? This is your baby, bro. Did we hold this? Nope. Could you have tried to take a long here? Sure. Right? Could you have tried? I mean, I don't think it would have been the worst long idea. I mean, you had decreasing volume back into 227. Absolutely. Okay. 227. Could average down into it. Yeah. You could have tried. And then you're going to keep a stop below, probably below 226.50, which was like the Wix. Oh, freak. Gosh darn it. What is happening here? What the heck is what in I'm sorry, I don't know what just happened there. Is it good to trade from a cell phone on Webull? Sonja, I think you're just trolling me now. You would have wanted this area, right? You would have really wanted this. What do you would have come on, guy? What are you doing? This broker is starting to piss me off. You would have wanted any back test into like this area to hold really nicely. As you could see, it didn't even at 227 and then instantly had increased sell volume. You just knew right there. You could have gave it a shot, right? You could have gave it a shot. Kept the tight stop under like 226.50 probably. It is not good to trade from a cell phone. I don't care who you are. If you're really good at it, good for you. But 99% of people can't and they shouldn't. So disagree with me all you want. I don't really care. You absolutely should not. Especially in the bathroom, on your phone, during work. Um, that's just recipe for disaster. It, yeah, Woody, you would have wanted to see like this candle hold, and then we popped up, and then maybe another little higher low, and that would have been like, hey, this is holding. I'm gonna take this higher. But this, we had one green candle immediately red. Yeah, Sonja, don't do it. You just want to swing trade. If that's all the time you had, you can't day trade. If you can't have a laptop with you at work, that's not your work laptop that you can trade on, then you can't day trade. And that's okay, guys. It's okay to accept that you can't day trade. It's okay. It's not the end of the world. We do swing trades. Swing trades are definitely something you could do as well. You don't need to look at your screen all day. Keep it whole numbers and trading all time high. Keep it whole numbers. Keep it at 5 to 10% increments to the upside, and you can use fib extensions. We do over that on one of the. We'll go over on one of the master classes. Okay, guys. I think we're just getting to like a Q&A now. But any questions on the swings? What we're looking for? That's the opening range. Opening range. Any questions on the swing trading, guys? Okay, cool. If that's it, guys,
Thank you,
we will
Dingle
probably.
the Berry.
What?
No, I was just saying thank you, Dingleberry. Thank
Oh
you
yeah, thank you.
guys, Alejandro.
That I think that's pretty much it, man. We finished up the questions and stuff. Did you guys find this helpful at all? Really, all we didn't tell you guys anything new,
But for those new,
but for those new, this is new.
welcome.
But
Yeah.
this is just the same stuff we do in the day trade stuff, but we're now doing it on a much higher time frame.
Is it starting to make sense
Is
how
it
it's
start?
all relative? Where
Yes.
it's, what we're doing on swing trading is also what we're doing on day trading. It's just a smaller time frame and a little bit faster action, right? So, definitely it is confusing at first because you think, oh, swing trading way different than day trading. Yeah, I mean, it's definitely a lot faster day trading, but what we're looking for as far as entries and exits are still going to be the same thing. Um, from swings to day trades, whether you use the 1 minute time frame to the 1 hour time frame, right? It's
Yeah.
all very relative. Everything
Yep.
you learn in trading should be relative for any time frame you're using, right? There's still
Yep.
going to be supply and demand on the 1 minute time frame, right? There's still going to be support resistance levels on the 1 minute time frame, you know. So not saying use the 1 minute, but I'm just, just for example, from daily to 1 minute, from monthly to 5 minute, it's all just relative, all definitely relative. It will be posted in the Masterclass channel.
Masterclass. Yep.
Pre-market high and low is definitely good. So someone asked me this question: how do we know if it's on the last Masterclass? How do we know if it's trending? Um, if we're breaking above pre-market high and we can break above yesterday's high, pretty good chance that we are going to trend higher. Pre-market high, yesterday's high, pretty good chance that we're going to trend higher. Pre-market low, yesterday's low, pretty good chance that we're going to trend lower, right? Why is that? Well, if we're breaking above yesterday's high, big resistance, sellers are present. We're breaking above pre-market high as well, where sellers are present. Never breaking two pretty big levels where where sellers are heavily present. Finally breaking above both of those levels, more than likely those sellers will turn into buyers. We'll get a nice trend higher. Likewise, be flip to the downside, right? So yeah, pre-market high, pre-market low. Definitely, if you want to mark those, they are still good levels to have, right? Definitely good levels to have.
All right, guys. I think that's it for me, Justin.
We are trying to be live every day. Sometimes I'll take a day off. Um, just I'm human. I need a day off from live voice
For sure.
every once in a while. But we try to do weekly master classes once a week, right? And then live trading pretty much every day. So read first channel.
Mm.
Read the read first channel if you haven't, those new. Read first, read it. Gives you a whole breakdown. The Discord, everything, where to start, gives you a good direction of where to go and start building out some strategies, videos to watch and all that good stuff. But thank you guys for coming out. I really appreciate it.
Yep.
We
Yep.
will see you bright and early as always for pre-market huddle. We do have Apple and Amazon tomorrow.
Mm.
Oh, I didn't even look how did Meta do?
Good. Up.
Pretty good.
Green.
Yep. Okay, cool.
They got Nvidia
Um,
up. They've got Amazon up. Apple up a smidge.
ooh, nice.
Yeah, they're doing all right. Everyone's doing
Okay.
good.
Okay. All right, cool. Yeah, so we have Amazon, Apple tomorrow, big ones,
Two big ones.
and
Two big ones tomorrow. Absolutely.
Coinbase as well
Coinbase.
after DraftKings and Roku. As far as economic data, we have
Jobless claims.
jobless claims, but that's before the market. Some PMI, ISM, 15 minutes, 30 minutes into the market. So not too huge. So tomorrow should be pretty good.
Yep.
Um, yeah, okay. Love you guys. See you guys bright and early.
Later. Peace.